All right. Good morning.
Good morning.
How is everybody?
Good morning.
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 Everyone make it through the weekend.
Franco, you look bright and shiny.
It's afternoon in Switzerland.
Good afternoon. Yeah,
That's right. Yeah. I
he's
like
already
your
lived our
glasses, by the way.
he's already lived our day.
Yeah.
So how'd
It's
the
just now
market
the
turned out? That's what I want to know. Sweet.
funny.
Okay, well I'm gonna get going because it's Monday. And Mondays are
All right.
always busy. So welcome everyone. It's the 18th of August, 2025. Not financial advice, educational only, and we welcome all your comments. If you want to look at a stock chart, put it over in the chat, uh, and then we'll get going. Not really much going on today, other than we've got Zelensky, Trump, and half of the European leaders are coming to the United States to discuss what uh, Putin and Trump talked about last week. Got Jackson Hole Summit coming up this week. That's always full of speeches and things that can move the market. All three indexes last week for the week closed with gains. That's second consecutive week. The Dow Jones is up 1.7% for the week, and the Nasdaq and the S&P are up about 1%. And the real driver for last week was optimism that we were going to see interest rates come down. And then we saw some reports come out that maybe inflation wasn't contained, and then we saw what happened there also. We look at money flow sectors. The best performers were healthcare, communication services. You remember healthcare has been beaten down, but then we had United Health zoom up when Berkshire took a big part of it, and a couple others also. And where money was flowing out of was consumer staples and utilities last week. Today on economic news, we have the NAHB housing market index, and you can see we're just kind of flat for opening here. Uh, and we see Bitcoin has went down to 115. We'll look at that chart too. Again, that has to do mostly with interest rate speculation. Let's get off of this and let's go over. I want to go over to the Discord for anyone who's new on today for the morning edge. Here in the Platinum channel, which will be opening up, we're just going to have one channel now, as Kerry announced on Friday. So guys who were not on Platinum, who are now upgrading, will get everything that we have over here. And we have a lot of it's technical analysis. And we started out with swing trading, but we also look at technical analysis for long term. And then Trent does intermediate term forecasting also. But over here, we have every Sunday, I try to put out a couple of charts under this charts of interest. We have a couple we put out stocks trading under the 200-day. You can go and look at it and you can see the stocks here. And then we put in charts and kind of what the under the 200-day is. And we also do a swing trading watch list, okay, with charts down here and kind of explanation. Then we'll go over those today. I also have an office over here. We'll probably be combining all our offices under one in the Discord. But last week or yesterday, I put out and I looked at weekly global financial markets. And globally, the financial network is showing a preference for fixed incomes and liquidity last week. You know, the U.S. stock market is hitting new highs, but global investors are rotating out of U.S. equities in a diversified portfolio. So when you look at macro, we're seeing, you want to kind of look out there and see where it's going, because sometimes we get so focused on day-to-day price actions, we kind of miss out. But it looks like international money, all global money, is moving into money market funds and global bond funds. And they're kind of moving out of U.S. equities, okay, and more into world funds. Commodities saw an outflow last week, and also cryptocurrencies too. So we're seeing kind of a flight to safety globally. You know, as investors and institutions around the world look at macroeconomic, geopolitical happenings that are going on. So just be aware. And we try to put these in here. So definitely, you can get a flavor of the market besides, just the technical analysis. And then let's go to some charts. And got quite a few today. I'll go through a few of the indices here. The Dow we have. Again, It's going to open up right below the resistance that we've hit several times. You can see going back over the weeks. This is a daily chart. Okay, here's the 200. We're still over the 200. We're over the 20 and the 9. Okay, so there's an uptrend, but we've hit resistance on the Dow. We'll see the same thing on the SPY, which is the S&P 500. Okay, right here, we're hitting resistance. There's some sell order resistance above that. But again, a couple of days, that resistance on the SPY telling us we're just kind of slowing down and consolidating, kind of deciding which way we're going to go. And then on the tech heavy Qs, and again, these are the S&P and the Qs are driven a lot by the Mag 7s, the top 10 stocks, you know, in each of these represent a large percentage of the market cap and the movement of the Qs and the S&P. Bitcoin, we look at Bitcoin over the weekend, you know, with everything trending about interest rates, we saw it come right back down, and Bitcoin trades 24/7, right to where our support level is at 115. We talked about 115, we talked about 120, and then 125 above. We've kind of been trading, you know, between this 115, and we popped up a little. We couldn't make it here. We popped down a little here. We came back after we hit the 50. Now we're under the 50, so if 50's giving us a little resistance, our oscillators are not looking, you know, positive, but we're still hitting this 115. If we get under this 115, we'll be back in this area here between the 110 and the 115. But the difference between here and here is that 50-day moving average that we're below, and the oscillators are also negative. So we'll see if this level at 115 can hold and gain some strength. But right now we're not seeing that. And Ethereum, for those of you who like Ethereum, it was been on a tear kind of lately. You can see Ethereum, and it's come back over, and now it's underneath the 9, and we're heading down, and the oscillators are heading down too. So if you're in that, you know, a lot of people might be in the ETF from Fidelity, which is the Fidelity Ethereum Fund. And we saw last week that we saw resistance come on, and again, that's what we're seeing, you know, in the charts also. MicroStrategy, of course, is a leverage play against Bitcoin. You're seeing that fall as Bitcoin falls. It's about a 1.5 to 2x leverage play. You can see we're going to open up down right below the lower Bollinger Band, but above the 200. The 200 is going to be a tough level of support. If we get below the 200, we could see it fall even further on MicroStrategy. NVIDIA. These are just, you know, they've come up, and NVIDIA reports not this week, next week, I think. Again, it's just kind of waiting. You got the 9 coming up, doing that curve close to the resistance level. We got resistance right next to sells. So there's a lot of resistance above you on NVIDIA. So something will need to be a catalyst to get us past that. I'm not going to go through all these unless you guys want me to. Again, Apple had a nice run up, resistance. We've hit resistance. Palantir. Same kind of thing, resistance kind of coming down. Now we're below the 9. So we're seeing some slowdown, and that's why you're seeing the Qs and the S&P, you know, flatten out, because you've seen a lot of these bigger stocks that move these markets are kind of flattening out. Microsoft, okay, came up, resistance. We came up right to where sell orders are. We're seeing the Bollinger Bands are parallel. Running, look at this Bollinger Band running right along the 50, which will become your support level after the 20, the lower Bollinger Band. But again, the oscillators are turning down even on Microsoft. So again, we're seeing a little bit of slowdown in the momentum of the mags. I'll go to our watch list this week and just kind of show you what I'm thinking. Again, this are stocks you can watch for potential swing trades. And the reason is, okay, this is Realty Income REIT. This is called the monthly dividend provider. A lot of people use this for dividends. It pays every month a dividend. It's a real estate REIT, but you can swing trade these too. You see, you got it above the 9, got all the oscillators positive. You got resistance here at the upper Bollinger Band, so you always try to come back and catch it a little lower. So if you get it, you know, if the market opens up, and today's Monday, we're gonna have a lot of volatility. All the orders over the weekend are sitting there piled up, you know, like you come in your desk on Monday at work and all the work is piled up because it didn't stop coming in, or it's in your computer, and you've got that, you know, first 3 hours you're trying to get through everything for the weekend. That's what we see on markets too. So again, you might be able to catch this if this meets your trading plan. And if you don't have a trading plan, go look at mine. create your own and then paper trade and prove it out. But again, O was on our list this week. Look at, we're seeing a lot of, like we said, the money's starting to flow into healthcare. AbbVie has been rolling right along the upper Bollinger Band. Again, I don't like buying it on the upper Bollinger Band. So if you buy it, you can see you have opportunities where it comes down. You can get below and get a cost basis inside this Bollinger Band. You see it here and here. So try not to buy, but again, you got some resistance coming up. So this one, you gotta look at what your reward's going to be, which is where price action is to where you're going to hit your first resistance, and what your risk is for this to come down to support. So your risk is a little more than your reward on AbbVie, but I just want to put it in there because it has some good momentum. Out of the housing sector, this is Masco. Again, last week, the housing took off a little bit because of interest rate thoughts. This one's come back in the Bollinger Band. Masco is a supplier of cabinets and different things for housing. I actually have some of this in my house. I went up to the factory before I bought it and watched them build some of the stuff that I want to put in my house. And so it's a solid company. But again, when we look at technicals, we don't really look at the solid, if it's solid or not. We just look at the technicals. But again, it's come back in, try to get a better price. Watch the opening today. Don't get in right at open, let it calm down a little bit. ALK out of the airline industry. Alaska Air got above the 200, came back, tested it 2 days above, following the upper Bollinger Band. This is hard level of support. So, if you get into this, make sure you have your stop losses so you can prevent the downside from, if this thing decides to dump, and then you can just follow it up as it goes up. The oscillators look pretty good on ALK. WMS, again, these are all on the list this week. This again is another one that's come up. Advanced drainage systems, probably never heard of this one. Come back to the inside of the Bollinger Band. There's some sell orders up here at 145.51. A lot of times we see these come up, consolidate a little, let the support come up, and they either cut through support or they'll continue up. Looks like that so far the oscillators are telling us, it's more of a positive than a negative. But again, use your own trading plan. SYK, another healthcare. Okay, it's been fighting the 200. It got above the 200 and the initial support level. We do not have confirmation on the MACD. And again, these are ones I'm watching, but I didn't put them on the list. But these are things you guys can watch on your own. We'll watch them throughout the week. DXCM, another one that got above the 200. Just starting to cross the MACD. I still, I didn't put it on the list yet. It's got to get past this 20 before, and get a little more momentum. But these are things we watch as we don't trade them right away. We're watching them. APA, this is an energy stock, oil, and it's got above the 200. The 200 is sloping down, but you got everything else, the 20, the 9, the 50 sloping up. Got a little bit, watch this stochastic here because it could cross back over to the negative or sideways. So just be careful. Support at the 200, resistance at the upper Bollinger Band. We look at under the 200. We have a couple left from last week. TAP. Okay, this is Coors. We got in at this level here. Okay, this is our cost basis, and it have a nice run up. Always have your sell limits or your trailing stops put on. So you maintain your profit. Your profit's anywhere from between here and where your price action is at any particular time. Right now, you got support at the 9 and the 20. You can put them down at this level, and see if you can keep riding it up. But we're up about, I forget what we're up on that, several percentage on TAP. And the other one we're still in is VTRS. I think we're up about 9-10% on this one. This one we put in under the 200, hit here, and it just went up. Stopped one day at the 200, came back, just kept rolling. We kept putting our stop limits below, didn't hit, and we're just following it right up the Bollinger Band. So this one, I think we're up about 10% on this one. It's a nice one. You got some resistance ahead of you. Put your sell orders, your stops. Protect your gains. Your gain is from where we got in to where price action is at the moment. So again, a couple others we put on this week, the new ones, GPN. Again, GPN got above the 9. It's under the 200. Yeah, these are under the 200 list. It's got a nice run up. You can see we're touching the upper Bollinger Band as a resistance. It's coming down, giving you some entry points. So again, if you do get in, be careful of Monday morning openings. They're very volatile. I try not to even watch, in the Monday morning unless I'm trying to get a stock at a really good price, ridiculously low price. You might be able to get that if you want to do that. Another stock, again, we're looking at healthcare. Merck, above the 50, above the 200, above the 20. You got some sell orders above the upper Bollinger Band. But again, we're starting to see this kind of a curve back up, especially in healthcare. If we look at healthcare, just the ETF, you can see why we're seeing all these healthcare stocks go up. This is the healthcare ETF. You can see for the last 4 days, we've been on this upward trend, well, 5, 6, 7 days actually. Got above the 9, got above the 20, got above the 50, and then we got above intermediate support level. So you see healthcare, which was down, is now rolling up. And that's what we see. Where does the money flow? We saw it flowing into healthcare and in the communication sector last week. We got BMY, another healthcare kind of stock. Again, above the 50, above the 9, we're under the 200. We got some good oscillators on that. That's on this list this week. And EQR on the list this week. Again, we're looking for these patterns that come down, hit support, and then start to swing back up so we can ride these back up. They're not, these are not guaranteed because it is the stock market, but these are the patterns that give us a higher probability of a successful swing trade. We're starting to see cross over the MACD, and that happened on Friday. So this one is actually a real estate stock. A couple others we're watching. WHR, one of our favorites, made 30% on this last time. DHR, and again, these are just things I'm watching. I want to see if DHR can get past this 200, and sustain, back test it, and then see if we can run it. Certainly not getting into it yet until I get confirmation. CMG, I talked to someone over the weekend about Chipotle. I want to see more momentum on the RSI oscillator. It's only at 39. I want to see that go a little higher, get past this level of sell resistance. But again, this is what we're looking for. So whoever I talked to, I think it was Craig, that's a good eye on this one. I'm just not into it yet. I'm a little more risk adverse. I want to make sure I see that momentum pop back up. UDR.
Mark,
Yeah.
Chipotle, one good thing, one indicator to watch is the guacamole index.
Yeah. Okay. Did this come from Patrick from London?
No. This is, I've heard about this. The guacamole index. If the guacamole is at a shortage, Chipotle is going to struggle.
Okay.
So we'll probably come into the springtime. Guacamole will start ripening, and we'll see how it move up.
Well,
So just be aware of these outside factors that are influencing food stocks.
We need to find the chart on guacamole index. That would be cool. I'm sure TradingView has one. They have everything else.
Yeah, I'll look it up while you're talking.
Okay.
Sorry to interrupt, but I thought
No
that
problem.
was really
That's
important.
It is. UDR came right down, support. We popped above the 9. We're not a full candle above. I don't have confirmation here. Things I'm watching. These are things when you swing trade, you got to look ahead and see what's coming next. What's in the pipeline. Just like a drug company, what's in the pipeline that we're going to make money on later. This is not where it's at now, but it's where it's coming from. EXR, another one I'm watching. Not there yet. It's come down. We're seeing these down. We see it hit support sideways. It's the same way we watched United Health forever. Okay, and we did. Let's move this out. I even got to move it out further. United Health, remember when this thing came down and we hit support and we just went. We just watch, and then it died again. And then we waited and we talked about last week. Well, look, it's over the 9, it's over the 20. And then boom, we had that news come out. And now it's at resistance. Some I know, bought in back here, which was good for them. I want to see if resistance actually moves. I think we're going to open up a little higher today. But, this is one of those we talk about. This, it's a bellwether stock. It can get beat down. We have, Margaret who works with insurance and United Health, who calls it the devil, but it's, the devil you might want to sleep with because it might be able to make you some money. That's what we're trying to look at, with some of these others that are doing the same kind of pattern. Regeneron, another healthcare, kind of moving up. It's not where I want it to be yet. The things we're watching, look at that sideways pattern, just like United Health. We can start getting some momentum and swing that up. There's some money to be made up for Regeneron. MOH, same thing. Okay, we're seeing this down, sideways, starting to pop up. I'm watching the Bollingers. We're still sideways, which means consolidation. But I'm also watching the oscillators, which are moving up, where they're in positive area. So things like this is what we're watching. And then another one, you think would be down and out, just because of packaging. UPS is another one that kind of shot down sideways, starting to show a little bit of life in it. Not yet, but it's something I want to watch. A couple other things that we looked at, maybe some setups. Now, a lot of you like Sprouts. Sprouts is, come down and hit earnings, came down below the 200, and now it's finding some support here at the intermediate support level. It's not there yet. Still got the 9 coming down, got the 20 coming down. But these we'll see if it watches sideways and goes back up. We're not there yet. Okay. These are things we're looking at for in the future. DOCU. Oops, sorry. DOCU. DocuSign. Same kind of thing. Down, not back up yet. So I got a ton of these. I'm not going to go through them all. One of my favorites, as you guys know, Berkshire B. We've been watching this one try to get back above the 200. Now it's come back above the 9. Nice swing trade here. Came back down. It's having trouble with the 50. 1, 2, 3 days below it. Then it needs some momentum to get that to push up. If it can get above the 200, then we talk about Paul Tudor Jones, and you might want to invest in this. It's a tough one to hit. So we can get past it. That'll be an investable trade, if it meets your trading plan and it meets your risk tolerance. And I think that's about it, Trent. I got a ton of them, but I could go through more, but we don't have enough time for all that in an hour meeting. So head back over to you.
Okay. So we've talked about this throughout the last month or so, but markets get tired. They get exhausted, and you have to think about what fuels the move in markets, higher or lower. And that is money, and that is money flow. Mark hit upon it in his Discord post last night. And that is something I think we really need to pay attention to, because as I was looking at the pre-market on the tell sheet 12, there are 2 out of 12 of the stocks that will open higher. And if you look at their charts, they hit a roof, they've hit a tire, they're tired. There's not enough energy. If you look at systematic funds, CTA funds, vol control funds, risk parity funds, these are all algorithmic driven funds that are based on volatility or money flow, that kind of thing. And what we have seen is since April, back here on that April 7th mark, we've made this enormous move on the S&P. I mean, we broke the 15, we broke the intermediate, and we just have been riding it higher. But when we got into this sort of period of time around the 25th of July, maybe, the 24th of July or so, we've just sort of been moving sideways. And you're seeing this in the options market. Now, Friday was option expiration for the month of August. And when that happens, usually the week after, what happens is all your market makers, all your dealers readjust their hedging. And so as you approach expiration, the hedging gets heavier and the volatility gets more and more compressed. But once you get past expiration, typically the week after, the 2 weeks after expiration, that hedging goes away, because now market makers are now looking at, okay, what's coming? Is the trend higher? Is it lower? And they act accordingly when it comes to hedging. And so what we should expect to see is volatility will start to be more freer, allowing in the SPX or the S&P 500 and other stocks, there's more of an organic movement in those companies, those stocks, those indexes. And when you get closer to expiration, there's less organic movement, there's more mechanical suppression. because your market makers are hedging out. Well, we're now first day into a new monthly expiration, option expiration. So there's going to be more freer movement organically within the indexes, within stocks. And we should anticipate volatility, which has really been suppressed going back, since, let's say, July 16th, let's say it's a month. We've seen the VIX just go down and down. And that's as we get closer and closer to expiration, the more and more hedging happens and more suppression of volatility. But once we get past expiration, that volatility starts to free up and we get more organic movement in the overall equity markets and bond markets as well. So as we go through this week, and as I pointed out on the tell sheet 12, 2 out of 12 stocks are going to open higher today. The remaining 10 are supposed to open lower. And if you look at the charts of some of these companies, let's just take a look at NVIDIA here. This is a daily chart of NVIDIA. You see this sideways movement really starting back on July 31st. And it's just moved right in this range. And today it looks to open up just a little bit lower than where it closed Friday. But it's been riding this trade trend line for a while. The question is, will we break through that? Will this exhaustion, this expenditure of money over since April, have to recalibrate? And you think about it yourself as a human being, mentally or physically, you go on a run of using your brain really hard for a long period of time, or your body for a long period of time. At some point you run out of energy, you run out of the ability to go forward, so you have to take a break. Maybe it's you go on vacation, maybe you just step aside for a while, whatever. Markets are no different. And the fuel that fuels our body and our mind is food. What fuels markets is money. And these these algorithmic trading funds, which have been deploying capital and taking on risk since April, are running out. They're running out of fuel. And so what I'm seeing here, in my opinion, is a sideways movement in companies like NVIDIA, the Mag 7 overall. And to me, that is a telling story of here's the Mag 7 plus Bitcoin. Look at them. I mean, they all have had these extended runs, and the fuel that has fueled them is is been deployed. So what do you do if you're a big systematic fund or an algorithmic fund? You recalibrate, you step back, you take a vacation, you take profits. And that's where we're at now. We've freed up the risk, the suppression of volatility, which moves markets in a lot of ways by expiration on Friday. And now we're in this sort of organic zone. And so what I would say to you all is anticipate a recalibration, anticipate a pullback. I wouldn't be surprised if we see a lot of these, in this case, this is the 12 top market cap S&P stocks, 7 of the top, and then 4 or 5 of the top um, crypto stock, or 5 of the top crypto stocks. I would not be surprised if we see a pullback below the trade trend line towards this intermediate trend line at some level to find support. If I'm looking at gold, this is usually a contrarian indicator to me. Is if I'm looking at the gold index, look at it. Like since April, it's moved sideways. What is the equity markets have done? They've gone up. So is this an accumulation on the institutional level? Are we seeing a move sideways in gold futures? I wouldn't be surprised if we see a rotation from risk on to risk off. And it's not a crash, it's not a major correction. It is just a recalibration of markets. And I think as we go into this week, be more cautious when it comes to your risk deploying of risk. Be more cautious of where your risk management process lines up to where your portfolio is, because anything right now, anything could move this market. Some bad news, somebody drops a bomb. I mean, Mark mentioned something about all the European leaders are coming to the United States. That alone gives me chills because now you're consolidating all the world's power into one location. That could be a shit show. I mean, it seriously could. Not, I hope it isn't. I hope it says nothing. But I think those are things we have to take into account when markets aren't hedged out real hard in the final 2 weeks of monthly expiration. You get a lot more volatility, and so keep that in mind. Keep that in mind where you're running your trailing stops, where you're running your intermediate to long-term investment trailing stops. Anticipate maybe a rotation to more of a broader market, more than just equity, tech stocks or AI stocks. I really starting to see that with, Berkshire's, that's a value oriented company. And it looks like as though it's starting to hit a plateau, a support level. And that could be that rotation to value again. So remember, markets are always looking for value. They're looking for where can I buy at a reasonable price, run it up, take profits, and recalibrate and do it again. And I believe we are in the beginnings of that for the next week, maybe next 2 weeks. So keep that in mind as you invest and just really have a good risk management process within your overall investment process. This
I
is,
think
to me, this is sort of that 3 month rotation. We talked about that a couple of weeks ago, how markets rotate in 3 month categories. We're beyond that 3 months since the bottom in April. We're now in that gray zone. So just take that into account. Let's open it up to the floor.
I think that's
Questions, charts, and
why
all that kind of thing.
I think that's why I wanted to show the global movement of money globally, that it went risk off last week. And if we don't look out, because even our big money managers are not just focusing on the US, they're focusing worldwide. And you saw
Yeah.
that most of the money went into bonds and money markets and out of US stocks. So that won't hit until this week or next week, when you start thinking about the movement of our markets. So that's why I try to
Yeah.
look out just a little bit on that, and to be careful of what I'm seeing. And then you talk about the housing market. And if the housing market, along with the jobs market, start to continue to go down, that's not good for the macro look of the U.S. economy, even though the stocks look, at record highs. So yeah, that's
Yeah.
what we're trying to talk
Taking
about right now. Go
here's
ahead.
the other thing I talked about in my TikTok video this morning, and that is Wall Street greed. Remember Gordon Gecko, or is it Gordon Gecko? Is that his name?
Yeah,
From Wall
Gordon.
Street?
I love Gordon.
Yeah. Yeah, Wall Street is about greed. We're in the second half of the year. Hedge funds, traders, mutual fund managers, they make money based on profits. They make money. Mutual fund managers make a bonus based on if they beat their benchmark. They don't have to beat it by much, but they need to beat it. So if you're lagging, if you're I always used to say a Harvard master, a Harvard grad in finance, you're on a trade desk, you're in your mid 20s, and you have a cocaine habit like no other, and you're out partying every night. You live off your bonuses. You live off that. And so you're hyped up, and your main goal is between market open and market close every day. You just want to make money because you want a house in the Hamptons like your boss. And these guys are going to push hard into the second half of this year because a lot of them are lagging. And so take that into account. So this recalibration potential is a setup for these Wall Street greed to really kick in as we get into the second half of the third quarter and into the fourth quarter. Remember, these guys are motivated by money. And if you can follow that money movement, you can make money as well. And hopefully you don't have a cocaine habit, but uh,
Or
I
you're
remember
on the other
when
side of that trade. You're providing it. You're making some money off that,
yeah, exactly.
which we
I
don't
remember
endorse. Which we don't endorse for sure.
Yes, I remember just one little quick thing when I was I was studying for my Series 7 back in '99, and I took a class, and this guy was probably just over 40. He had just retired from Wall Street. He was a bond trader for Bear Stearns, and he said his yearly on the last 5 years, his yearly entertainment expense on his tax return was $110,000 on average. And I was like, you got to be making some serious dough to support that. He goes, yep. And I did. And that's why he retired at 40. But you just remember, it's greed. And it was, and if you adopt that these guys are trying to make a ton of money, you can better position yourself. You can read what they're thinking. And I think right now they're like, we don't have any more fuel. We need to recalibrate. All right.
And they like to suck in. They like to suck retail people in and then rug pull them. That's where they make their money. So that's my mission, is to not let you guys get rug pulled if I can, because, and Trent too, we've been there, we've done that, we've seen it. I've seen it destroy people's lives, during the .com, great financial crisis, and it's horrible. And we don't want anyone to go through that, especially here on this channel and this program. So, all right, we got a bunch of stocks, and Esther has started us out with a bunch of them. Domino's Pizza, she's looking at that same pattern that we look at, down, support, coming back up. I'd like to see this 9 roll up a little bit, and I want to see some confirmation on the MACD. This is kind of my go-to signal. Now, the stochastic, usually when it crosses earlier than the MACD. So, if you're feeling a little more risky out there and you see that and you think, okay, I think that's going to continue up, you might want to, hop in there. I'm going to wait a little bit. Think about this, you got the 200 here. If you can get above the 200, it could become investable again as far as a Paul Tudor Jones. But, we're heading in the right direction. We did wick up, found some resistance at the 20. We'll see what happens today. But again, I would like to see a little more confirmation on the MACD, but I like the way the pattern's going for sure. It's kind of what we're looking for. Esther also put in LAMR, Lamer. I don't know what this is. Oh, advertising company. Yeah, look at that. That thing scooted up 1, 2, 3, 4, 5 days, went right past the 200, went right past the 20, past the 9. For me, I've seen that it's hitting resistance right here. And you can go back over history and see we've done this before. I don't know what the momentum on this is. It looks like maybe earnings, but earnings, earnings opened up right here, okay, after earnings, and then it dumped, and then something caused it to come back up. And I'm not familiar with this. Esther might be able to fill us in a little more on this advertising company. Let's look at the volume. Volume's okay. It's kind of sketchy all over, but again, you're over the 200. But again, I got resistance. You can see where it ended right here, where the sell orders are. We've seen that before too, right here, here. So you got 2 levels of resistance right above it. Tried to wake up, got beat back down. So, from a swing trade point of view, from my point of view, I'm not going to follow the momentum. I'm going to follow the indicators, and I'm going to wait and see if it can get past this resistance level in a meaningful manner. Also from Esther, ALB, one we watch once in a while, Ave Marie or Marleo. Again, above the 200. This one has, we've done it over here, did about the same amount, came back, fell down to the 50. Now we're back up. We've got some oscillators that look pretty good. Again, this would be your hard level of support. And then you got the 9 and the 20 screaming up for some potential golden crosses. And you got still orders at 86.69. We closed at 82.19. So 86 minus 82, about 4 points to the upside is your possible reward. We're at 78.48, so about 4 points to the downside. So you're right in the middle of that kind of risk reward area of up versus down. But yeah, I like this pattern. Came up, dropped, got back up, and here we are. We bounced back up. We're above the 200. We got moving averages moving up. We got oscillators that give us some confirmation. Then it's up to you to use your trading plan and to decide what your risk versus reward is. Nice one. MDB. Another one from Esther. Moncob. Okay, another one that's come back. This blue line is an intermediate support. We've hit it, come up. It's kind of like, what we saw at the beginning of the last stock we looked at. Couldn't get past the 200. Now we're starting to see, 2 days up. We got above the 9, above the 50. We're right at the 20. come down. I don't see the confirmation on the MACD like I like to see. I do see a little bit of improvement on stochastic, and I see the RSI at 50. So a couple of these are moving up. If you do get in, make sure you put in some stops on the bottom side to here's your hard level of support down here, but you've got two of them right here at the 9 and the 50. Your upside, would be up here to where you see sell orders at 229.77. And be careful, it's Monday. The broader markets are flat to downish. So you might want to wait and see how the market opens and clears out a little bit on this one for sure. Margell said, how about PANW? Palo Alto Networks. Yep. This was actually on my list I was going to show, but it was so long I dropped this one off, but I'm glad he brought it up. Kind of came back down, came back up. Now we're kind of sideways on Palo Alto.
I think earnings today.
Is it today? Yeah, so I would be personally, for me, earnings, I'd get out before earnings, or I'd wait till earnings to happen. You just never know. I don't follow these companies from a functionality point of view. I just look at the charts. If Paul's right and earnings come out today, you could see it either go up here or you can see it go down here. It's hardly ever, a small move anymore. It's just up or down. So on a swing trade, I'd prefer to hedge my bets. If I was in this, I would get out today before earnings and let earnings, let the dice run on earnings and see where it falls and then worry about it tomorrow. But again, it's not showing me too much as far as the strength and the momentum yet. And again, that's what the market looks like. Since we're having earnings, the market's kind of waiting for earnings, it appears to me. Walmart's is another one. Walmart's come up, hit resistance, for a week. Bollinger Bands are straightening out, drop below the 9, bounced off the 20. We're right on the 20, which is support. We look at the oscillators, they're trending down, and just as you see the stochastic trend down prior to the MACD, that's a sign that we're probably not ready for an entry into any kind of swing trade. The nice thing is you are above the 200 on Walmart. If you were an investor kind of trader, we'll go back a little bit and just show you this. They came down, got below the 200. If you hop back in, above the 200, and you pull this line across, you're still above as an investor. So that's why we use the 200 on a daily chart. That's kind of your investable line. And Trent has a trading trend line on his that works out really well too. This one is, again, one of the easiest, most simple trades you can ever make. It's one line, trade above it, get out below it. And that's what Paul Tudor Jones does. So I would wait a little bit on Walmart. We got to see what the strength of the consumer is. And I know that, Walmart does a lot, especially in sales of food. They compete very well in that. You can't ever throw Walmart out. I mean, they're definitely a player in the business they're in. But from a swing trade, we go up, we go down. I would wait on this one a little bit, just because the oscillators are looking down. And then John wanted Moderna. Oh, it's MDNA. Oh, mRNA. Oh, there it is. Moderna. Okay, Moderna. So this is kind of nice. I like this, John, the way this sets up. We came up, we hit resistance, dropped, earnings came in, dropped down to support. You can see how the green line, which is the 9, comes up, kind of skirts the upper resistance level, just like it's coming down, skirting the support level. Support, resistance. Got one candle close above. I'd like to see the MACD cross positively over the signal line. I'd like to see a little more momentum, but again, this goes back to your risk tolerance, your trading plan. Some people would see this, they're going to pull the trigger and say, okay, I'm going to go for it. I'm going to put some stop limits down here in this support level. If I can take that loss, I'll take it because I think I'm going to get a gain. You're going to see a little bit of resistance at the 20 here, 20-day. You're going to see it at the 50, which is right next to where the people put sell orders according to the program. So you have two lines of linebackers right at this level. going up. Doesn't mean it can't crash through it. It's just a little harder. But if we can get past that, you've got some pretty good run up to both where the intermediate resistance level is, and also you've got, the 200-day simple moving average, which will provide you a level of resistance also. Okay, got anything else? Two more. Let's see. Oh, we got a bunch. Okay, hold on. 10. FSLR. It's like solar stuff. Run. Yeah, run. Yeah, I think there was some legislation in on some kind of solar stuff. That's going to probably move some of these guys. CRML and ABAT. All right, let me go back and we'll run through these real quick. All right, looks like we're going into the solar world. TAN, which is the ETF for solar. And again, I think there was some legislation out there. I think I saw a note this morning. There's so much news that comes out, I can't grab it all, but something about something positive on the rebates or some kind of tax incentive or something on solar. So this is our solar ETF. It had a nice run up on Friday. You see we tapped out right in the resistance level, which we've done before. This may be the news that gets it past there. We'll see what happens today. Again, above the 200. Got the nice oscillator move, but again, that I can't trade on this side of that resistance level. That's usually where I get out. FSLR, we've traded this one before. For solar, get him to pull up. Looks just like the last chart. The first solar is a big part of TAN. Same kind of thing. I'd expect this to go back up. We're at 199.95. We got resistance at 207.80. $8 up. Again, watch that resistance, and then you've got sell orders right on the other side of that on first solar. Run. Sun run. I know this one's up today. I saw that kind of flip back on my. Yeah, it looks the same. Again, watch out for resistance. Doesn't mean this can't run. You get some catalysts like legislation, tax something, whatever that helps an industry. You'll see it go, but that is a huge candle. Okay, of a lot of people chasing. I just don't want you to get up here, get in here, and get rug pulled, which can happen pretty easily. Especially when the news comes out here, all the logarithms come in, start buying, and everyone starts chasing it up. And does the same thing on Monday morning, and then you end up back down here. So just know that it is the news is already out there, and the chase has begun. ENPH, you got to think of the long run of this industry, the solar industry business, and I don't think the administration is against the solar industry. They just don't want to subsidize it. To the point that it was in the last administration. So you got to keep that in mind too. And here we're above the 9, we're above the support level. We've got above the 20 on in-phase energy. We came up, we hit sell orders here, and you got again resistance at the 50. Oscillators look okay. Again, look at your risk versus your reward. If we can get past that 50 and get these Bollinger Bands rolling the other way, that'd be something I'd look at. You've got just a lot of resistance right above that right now. What else we got? CRML. Oh, that was just a nice one. Critical metals. 4.3, 9.1. You've got good volume on that. Critical metals. Must be some rare earth type metal company, I would imagine. Oscillators look good. Got some sell orders up here. I don't like to buy outside the Bollinger Band. Others who follow momentum will buy out there and try to ride this momentum as high as they can go, and that's a strategy that works. It's not my strategy, but it's fine. You got some sell orders at 632, and then you got resistance at 7. We closed at 584, so you got some upside. I always try to get it more of a bargain, as it's on the outside. Maybe probably get it inside that Bollinger Band to help your cost basis a little bit. Set a buy order a little lower. Maybe you come back and say, okay, it hit right here, come over here and maybe put it in at that level. For me, that's how I do it. If I don't get it, I don't chase it. I try to get things on sale. I don't try to buy everything. I try to manage it. And I try to only have, less than 5 swing trades rolling in a week. for me because that fits my schedule, fits my style. I don't have time to sit and look at it all day. So again, it's a nice pattern on that one, CRML. And AB, yeah, I think it's 8 now. What was a ABDI? ABDI. Okay, now I need to go back to chat and look at this one. ABAT. Okay, here we go.
Abbott, yeah. ABAT.
And okay, Abbott. Let's go back and we'll do that one. Can't even read my own writing. It's too early. Abbott. American Battery. Okay. It's had a nice, interesting chart. You can look back. It got above the 200. Again, that's that investable line. It came and it tried to go below it and it stayed above it. I'm just going to go back and see. Yeah, it's been above it right about here. I mean, you got in here. It was $1.53 as an investment. You're sitting at 277. That's pretty good, especially for a smaller stock. But unfortunately, we're hitting this resistance level, and you do have another sell order resistance at 305 above it. It can go up and pop up and hit that too, but this is two pretty good resistance level. I'm not saying you can't get past it. I don't know what the news is that's getting this nice momentum here. We come down and look at the MACD, just barely crossing on the MACD, but it is a cross by 0.2 or 1/10 of a point. So again, you got to look at your risk, which is your downward to the support level, and your reward, which is up to your first level of resistance, and then your second level. So when you think about getting in, you do have some opportunities, it looks like, on this. If you want to get in maybe at a better price that gives you a little more profitability up to your first level of resistance. But ABAT technology, let's look at it's got good volume. I just don't like that green line of resistance right there. It's just that's about when I'd get out. I mean, I like the swings when you get in right about here and you ride it up and get out right there. You see what happens, and you come back in. Now you're under. Then you get back above the 9 and the 20, and you ride that up. This would have been nice a couple days ago, but again, I would have come down and said, this indicator doesn't give me the indication it's going to go up, and it did. Okay, so that's just my risk strategy. Is like I don't want to take risk with my money at that until this indicator lets me know I'm closer. And some other people are more risk tolerant and say, you know what, I got extra money. This is something I need. I know this company really well. I've watched it before. When it does that, I know what happens. I'm going to get in and write it up. And that's just part of playing what we do here is have a strategy, get to know some stocks and apply your strategy and motivate and move your strategy to what you're most comfortable with your risk, using whatever oscillators or moving averages you want to use. Trent, you got anything else? We're almost to the end here. Let's see one more.
Yeah. We got to. I went down the rabbit hole when you mentioned Chipotle.
Okay.
And I got to thinking about agriculture and what influences Chipotle to do well, and what are the underlying variables. And this is a chart of the Invesco agricultural ETF. It's a DBA. This is a 20-day or a weekly chart of it. And as the cost to harvest to produce goes up, that reflects on Chipotle and other restaurant companies. And I'm looking at this going, okay, what is there an opportunity in some of these uh, these companies or these indexes that could be an indicator of an opportunity from an intermediate to long-term point of view. And when I look at this index, the agriculture index, it's basically really since once again, like November, December of last year has gone sideways. And I think this is, one of those indications to me is as long as agriculture is expensive, Chipotle and other restaurant food related companies are going to struggle because that profit margin is going to continuously get squeezed. Um, if we, from an opportunity standpoint in agricultural world, if we saw a break above that 2804 on a DBA, you could see a move higher up against potential resistance area, even though it's never been there, but there is a level of risk or resistance at 2975. This can be an indicator of those. If this rises, that means these guys are making more profit, which means potentially the Chipotles are making less profit. It can be that contrarian indicator. And so looking at this, I think these things through because I think about what influences a stock price. What influences if Nvidia can cut their cost, increase their profit margins, well, that stock will go higher, and that will reflect, overall in the long term. So I was just looking at this and I thought, wow, this is interesting. I mean, this is going back to as far back to let's see here. So it became an ETF back in 08, and you can see how just the ride it's been on, but you see this resistance level in agriculture. So this could be an indicator of, we see a downtrend in this, profitability in agriculture goes down. Well, maybe that's a positive for the restaurant industry and for the Chipotles of the world. So I don't know, just something I was thinking about.
Interesting though. Yeah.
Yeah.
I mean,
So,
that is Chipotle is a high end, for me, restaurant to go to. It's not cheap to go there. And
right.
if people cut back because they have fear of the market or their job or whatever, they're not going to go to Chipotle. They're just not, I got
Yeah.
asked what's my favorite chart. I don't have favorite charts. I do like the way that this realty income is set up pretty well. You got to watch this sell level up here, and I'll tell you why. Because always go, when you're looking at it, go back and to the left on your chart a little further. But I do like we're above the 200. Okay, I like the way it's moving up, but you're going to have this sell order, resistance. Now that'll move, day to day. But if we can get that momentum and keep that momentum up, and on this particular stock, there's room to roll on this. But this is a realty income ETF. Okay, so they pay monthly dividends. So this is going to align with interest rates. So if they come out and all of a sudden Powell says there's absolutely no way in hell I'm lowering interest rates, you'll probably see this go lower. Like it can happen like really quick. I do like that. And then the ones that we have already, on the under 200, VTRS, I mean, we already have this on the list, but this was just a pretty nice chart. Again, you can see it was up here at resistance and under the 200. Now we've got a couple things going for us over the 200. I like this run, especially, I waited till earnings. That's when we put it on the list because earnings came out. It got a little bit of a bump. Then we got past the 200, which, I mean, these are major levels of resistance. Today, this closed on Friday, right? It came back inside the Bollinger Band. We talk about that. 1, 2, 3, 4, 5, and I think I said that on Friday. It's probably going to pull back in. It doesn't stay outside more than 5% of the time, and it did. And now since it's done that, it has the ability to rock it up or keep moving inside. But with this cost basis, we are guaranteed profit. Wherever you want to put your sell limit or your trailing stop. And you got a little bit of run up to your first level of real resistance at the sell orders at 1104, and then if you get past that, I mean, resistance is 1165. We got into this. We put it on the list at 970. So it's a smaller stock as far as the price on it, but I really like the way that looks once we got in. But it's following just exactly what we would want 5 times outside the Bollinger Band, inside. And heading up. And again, we'll watch it. If it starts rolling this way like that, then it'll probably hit one of your sell orders and you'll get out with a nice profit. But right now, this one has kind of there's the open right there. They just right inside the Bollinger Band. So the market just opened. We just saw it. Okay. So anyway, those are, I don't have favorites, but those are two I really like. So hopefully that helped you, Brian. Nice question. And the market's open, Trent. So anyone else have anything else before we adjourn?
Okay, TA.
Okay, TA. Okay, TA. All right, let's take a look. Boom, boom. Huh. Always like to look at the volume. Volume looks good. It's coming back up. I like to see, a full candle above the 9. I like to see the 9 moving back up a little bit. Came down, it's playing with the 200. You got resistance right above you. You got some upside if you keep the 9 as your support. You don't have the crossover on the MACD yet, small one on the stochastic. I think there are probably better stocks out there for upside with this resistance. If you'll have resistance at 20, you'll have resistance here. You got 250 right above you. There's some potential, but what potential is there, and are there better stocks out there for you? This one, it's a medium for me. I don't know what they do. Again, I'm just looking at how I would trade it technically. Okay. Holy crap.
All right.
5 more.
Well, we'll wrap it up there.
Let's see. Yep. Okay. TA.
Okay.
Yeah, I
Sorry.
like APA is nice too. I saw Sprock talking about that. And NVO. Let's look at NVO. I think
Yeah,
that's
there
going
you
to be a
go.
runner today, isn't it? NVO,
Yeah,
Novartis. Again, back to healthcare. Now, I looked at where money's flowing, and it's flowing to healthcare, and here we go. Oh, yeah, look at that. This is another one. See, this is one of those healthcare ones. Sideways. Now we got some news. And, it had this little dip. It got above the support level, above the 9. We had a crossover right here. Yeah, this would have been a pretty nice one to, probably nibble into. And I think it's going to, well, here we are today. It's actually dividend day. They're paying dividends and they're up still right at the 20. So, yeah, this one, watch out. You got some sell orders at 58.04. I want to go back and look, see where we are, as a history of this stock, Novo Nordisk. And you can see we're pretty much, at least, going out this far back to a year ago, we're at the low. Okay, so there's a lot of people with a lot of money in here either trying to get out or judging the low, but we are on the support level. You do have some potential upside, but I'd rather be buying here than buying up here. And again, here's one of these investable ones. You got out here, Paul Tudor Jones, you saved yourself all this pain, one line. But yeah, healthcare is where the money's flowing, and Novo Nordisk is part of it. I think some news came out. I don't know what it is. Is it a drug or something? I thought I saw it in the news feed this
FDA
morning.
approved Wegovy for testing metabolic dysfunction association, something in adults. So they got an FDA approval to start testing
Okay.
on one of their drugs. So that could be it.
And like Kerry says, these drug companies live or die based on what the FDA tells you you're going to do. But it looks like it's going to be a little positive. We like these setups come down and swing back up, and the money is definitely swinging back into healthcare, at least for the last week and a half now. So good questions, good stocks, guys. Hopefully we answered all your questions. Market's
thank you, Mark.
open. Yeah.
All right. Well, we'll wrap it up there, and we'll be back tomorrow. If you have questions about this transition that we'll be going through between now and October 1st, feel free to reach out to me. You can text me. Also get on the Discord and message me there. I'll probably do something this week, a how-to transition explanation, probably do a Zoom call later this week. I'll put a video together as well and send it out. If you all have any questions, we'll go from there. But tomorrow we'll be back, same time, same place. And hopefully this will be a positive week from any angle you take it at. So we'll have a good one. And we'll
Thanks.
see you tomorrow.
Thanks,
Thank you,
guys.
James. Thank you
Guys.
Thank
all.
you.
Have a great day.
Bye. Bye.
Have a good
Live
one.
loud.
Live
See you later, guys.
Peace.